Good evening, Mayor, Board of
Evening, sir.
Trustees, and residents of the Village of Freeport. Belated Happy New Year to everybody here. As the village attorney mentioned, my name is David Tanner. I'm a principal in Liberty Capital Services, financial advisory services for municipalities in New York State, and it's my pleasure to make this presentation to everybody here this evening. As a bit of a backdrop, I just want to talk a little bit about process. Early on, I guess it was starting in October, we had met with the departments, collected numbers, interviewed departments in terms of what we thought their needs would be. We evaluated other variable types of revenues that we expected to be forthcoming in the upcoming fiscal year. And we booked that as ultimately department requests, along with we collected data. Myself, the mayor, and the board of trustees met with every department head sometime. I think that was early December, wasn't it?
Yes, sir.
Right, and collecting all this type of data. So it's really a collective effort here in the production of this kind of document. I just wanted to sensitize and tune everybody into that. So subsequent to that, we sharpened our pencils further. We're able to adjust some of the numbers on revenues as well as expenditures, finding additional ways to fund the budget without tax increases, property tax increases that is, as well as finding other ways to areas where we could reduce expenditures as well, which ultimately led to a zero tax rate increase budget that is presented here this evening. As some backdrop, as I said before, the budget as being discussed, presented tonight, is a zero tax rate increase budget. Last year, the rate was $62.296 per 1,000 AV. That's assessed valuation of property. This current year's budget being proposed tonight, or being presented tonight, has that same tax rate of $62.296. There is a minimal increase in the tax levy, which I'll explain a little bit further to everybody here. There is no override of the tax cap that will be required as a result of this budget. And this next little caption here, it says it all for the most part. It's the entire budget process was driven by about $1.2 million in mandated increases in expenditures, which was offset by capital cost savings initiatives, as well as, cost saving initiatives, as well as increases in non-tax revenue, and I'll get into that momentarily. But that's essentially how we were able to achieve what essentially is a zero tax increase budget. The budget still does maintain current staffing levels. There are 7 new police hires, as well as some part-time and overtime adjustments to this budget. You'll have to forgive me here. Let's see how this thing works. I was told it was. I tried it out. Okay. You know what's that saying, that wall guns? Everybody can figure that phrase? Presented here just a general budget-to-budget comparison from this current fiscal year to the one that's upcoming. As I mentioned before, the tax levy for the current budget is $42,510,491. Here, the new levy that's being proposed in this upcoming year's budget is $42,662,602. That's a difference of $152,000, about 0.26% increase. On a budget-to-budget basis, we're up budget, that's total expenditures from last year to this year, we're up about $844,000. That's about a 1.3% increase. There's some other factual information. The AV has stabilized. The village had been incurring reductions in taxable assessed valuation. This year we've leveled off and increased somewhat. So the taxable assessed valuation this year is increased by $179,000, about $108,000 altogether. As I mentioned before, same tax rates before. Just as a point of comparison, the tax cap would have allowed the village to raise its tax levy to $43,305,000. However, again, based on, which is another $642,000 difference from before. Yes, I got it. Thank you, though. Now it's working. We'll see. As soon as you sit, it won't work again, you know. This is really probably one of the most important slides, which I wanted to outline for everybody here. What we're doing here is we're outlining the mandated increases that we've incurred as a result of this budget. This last column here, I just want to call your attention to this column here. That's that $1.4 million increase that we're up against in managing the overall tax levy and how we're going to raise the appropriate funds. The real success story is, well, it's twofold actually. The real success story is a zero tax increase, but how we got there was combing through and healthcare costs. Managed to save about $605,000 in healthcare costs this year through better management of existing, how do you phrase that, clientele, I guess, for the most part, managing who was in the system, who was not in the system, as well as some improved pricing as well for services. On the non-tax revenue, we incurred a additional non-tax revenue of $643,000, and I'll give you a breakdown for that in the next slide. So if you take a look at, again, the $1.4 million, you reduce it by the 605, 643, and these are all approximations, but I just wanted to give you the general layout of how the budget went, what the overall numbers were. And to the left here, we have a breakdown in terms of what the mandated increases were. Pension, big chunk of it, $541,000. No personal services, that's salaries. We were able to control that this year quite a bit. That was only increased $46,000 in all. Debt service was a big number. This year, we, due to Sandy, we had some short-term borrowing for equipment that had to be paid off over a shorter period of time as opposed to a longer period of time. So that, and some of those monies are coming due. So a big part of the expenditure was a result of that, increase in the debt service. Insurance increased due to the storm-related costs, property casualty insurance, raising rates. We also saw it necessary to increase $100,000 to the uncollected tax reserve. This year's tax lien sale was off a little bit, so we thought it prudent at that point to improve that as well. And lastly, we've got a miscellaneous category here, about $95,000. So again, all in all, that's really how the $1.4 million mandated expenditures break out. Good, I like it works again. And what I've done here for you is break out what the non-tax revenue increases that we were able to develop for this upcoming year budget. We have a $165,000 increase in a couple of new pilots that are coming online, fines and forfeitures, which is really court revenue. We're projecting to be up. A lot of that's due to the weight scale program. Thank you, Chief. as well as licenses and permits. That a good part of that is we expect additional revenue from building applications, a result of some of the economic development that is underway right now in the village. And that's ultimately, as time goes on, that's going to be a real big story for the finances of the village. We hope to have more to talk to you about that at some point. So in all, we have $662,000 in additional budget-to-budget increase in revenue and non-tax revenue. Well, it's a 2.9% increase overall with that. And I promise this year to keep it short. And in so doing, that's it right now. Because essentially, again, it's a pretty, I like to think, pretty straightforward achievement this year due to some significant savings in expenditures and also our ability to call out and develop some additional non-tax revenue for the village, not to mention the AV, slight AV growth as well. The stabilization of the AV growth has helped quite a bit as well. So at this point, I don't know if the board has any questions for me.
I have no questions now. Not now.
I have no questions.
Not now.
No? If you don't mind, I'll
Sure.
open up to anybody here with questions.
Go ahead, get the slips.
Mr. Grossman?
Good evening, Mayor, Board,
Good evening.
village residents. Before this, just the last comment he made, budget to budget, we have an increase. We have you never mentioned it. Last year, we had a $10 million loss. In fact, what hasn't been mentioned is anything about the debt and nothing about our financial condition. And we're preparing a budget. We right now show a $24 million deficit, and that includes the utilities. If it wasn't for the utilities, we'd have, if the government stood on its own, the municipality, without the electric and the water department, we would have a $46 million deficit. So I don't know how we can go over a budget and budget-to-budget increases and not come across these numbers. It's amazing. I think part of the problem is you need a CPA and accountant to be in charge of the financial reports, not a couple of lawyers. Now, that threw me off a little bit when he made that statement, so let me just, give me a second here to get my notes here. All right, the first thing I want to bring up is there's a difference. I was going over the debt, and you have a difference of $221,983 between the notes to the financial statement and the government obligation bonds payable, the general obligation bonds payable. So I was just wondering if you could address that. The other thing I brought up before was the refunding bonds, all right? In English, that means you're borrowing money to pay off money you already borrowed. So from the information I got, you borrowed $46,680,000 to pay off some bonds. You got a premium because I guess you must have charged, you was offering a higher interest rate, so you had to, whoever was going to pick up the bonds had to pay a premium to offset the interest expense that the village was going to incur. In any event, What doesn't make sense is you paid $1,475,000 to an escrow agent on a refund bond of less than $50,000. If you took that $1,475,000 and put it in the bank at 4%, you'd do a lot better than you're doing here with this shifting money around. My question to you is, who's the escrow agent that got that $1,475,000? I'm very curious to find out, because now that disappears from the books. It's no longer on the books. All right? It's in some escrow account. And some guy's getting $1,475,000, all right, to administer it. Moving on. The reconciliation in the government funds balance. All right, you have included in that reconciliation current liabilities. It's not supposed to be included in the reconciliation. That's a $10 million difference. Now, these are audited financial statements, I assume. Then the other thing that really bothers me is you didn't close the books until November 28, 2013. How was anybody, this is 2000, in a couple of months you're going to close, 2014 will be due. You can't blame this on the previous mayor. You guys were all here, involved in this here audit and these figures. So you guys were here for the last 4 or 5 years. So you can't blame the previous administration. These books should be closed by June 30th, the latest. Not closed, they should be closed February, at the end of February, March, April, in the middle of May. You should have the financial statements completed, ready to be audited. The audit that comes in, he finishes it by June 30th. That's an indication there's something wrong in this department, in your finance. You're doing something screwed up. And maybe he wasn't that far off when he said you guys should have, what was that audit we called it? Forensic audit. Another thing I saw, which is crazy, why I say you need an accountant and not a lawyer in charge here. You're preparing schedules and you're offsetting revenue against the expenses. That's a no-no. That's not a generally accepted accounting principle. You don't show everything at net. Not everything, but when you feel like it, you show it at net. When you don't feel like it, you don't. Well, you know, a big answer to these problems, I think, would be get rid of the controller's office, except for the state. I'm talking about the local level. And you should be audited by private sectors, not by the state, and that would stimulate the economy. Instead of wasting the money on these guys that come here from Hopog and spend 3 months and get nothing done and don't even understand what they're looking at. I hope this is not the last, or the last thing I want to find out is, since we don't have any records for the bonds that were issued in addition to what we have as of February 28th, 2013, I believe there was probably close to 10 million added to the debt. I just want you to verify that. As far as May 2013, it looks like you issued another bond anticipatory note, Schedule C, $7.3 million. I hope this is not the end of it, because I really need more time to look at this to bring up some more questions. But that's all I have to say right now.
Your question certainly deserves an answer. what, I guess you were referring to you were asking about the refunding bond that was issued. Was the last May? I'm sorry, do you have the document with you? I don't have the document with me, so I'm going this by memory. No, I don't remember all the details of it, but I do know enough to answer your questions. Okay? I believe it was issued finally like in May last year. The par value was about $48 million, of which the village saved, net savings, all in, $5 million. No. You can't, because there are IRS laws. Please let me answer your question, okay? There are IRS regulations that don't permit you to use the tax-free borrowing to invest to make money on the borrowing that you're granted to borrow by the IRS, which is tax-free money. You're not allowed that kind of arbitrage, all right? But that's a whole nother question anyway. So what that bond was, and the purpose of the escrow, the $1.4 million escrow, was that there was a year and a half of the bonds they're not callable yet. Okay, the call was premature. So what we did was we put that money in escrow, and that's how these things are done. Those funds are put in escrow, or the word they use is, in fact, I think we might even have this conversation last year, but the word they use is defeased, D-E-F-E-A-S-E-D. You put that money in an escrow account, it earns interest to defease the debt and to have those funds available, so at which time as the bonds become due, they get paid off. So that's essentially how that works. So I'm not sure what your question is. No, well,
Sir, please don't interrupt. Sir, please don't interrupt. You ask your questions, let him answer it.
Thank you, ma'am. These are very highly regulated transactions. Well, I mean, okay, maybe I'll address the board instead. I may have better success with the board at this point, I know we've talked about it before. I made a presentation at the time the board adopted the bond resolution for that borrowing in particular. But they are highly regulated transactions. The sale, before finalized, is reviewed by the controller's office. They have to sign off on it before it actually closes. Their standard for net present value savings when you issue a refunding bond of this sort is in other words, the return on the investment, the benefit of refunding the bond is 3%. That bond has like a 7% NPV savings, net present value savings. So it more than well passed their standard for savings. There's an actuary that gets involved in reviewing all the documentation required for that as well. They put their CPA license on the line for that. And, with all due respect, whenever, the village can issue a refunding bond or a bond where they're going to save 3% net present value savings all in this case, they saved $5 million, albeit over a number of years. And the year before that, we issued another refunding bond for the village where the village saved, I think it was $1.2 million net present, budgetary savings over the term of the bond. Those are good deals. The bond market was at historic lows, and the village would be foolish not to take advantage of what they're permitted to do by local finance law to achieve those kinds of savings. So again, they're highly regulated transactions. I'm not aware of your questions. I really don't understand your questions completely. With all due respect, there's not really any consequence to the success of those two sales. Now, the village does borrow from time to time. We also issued a bond last year. The village earned a 1.9% net interest cost on that bond sale. Okay? So I don't see how anybody could, complain about the type of interest rate that they get, and these are for necessary borrowings along the way. So the village also has a capital plan that we discussed before with the board, with the community, where ultimately they're paying pennies on the dollar. It's essentially a grant-based capital improvement program for roads. There was a boiler that was replaced. northeast courts resurfacing, waterway trails, a street sweeper for $220,000. The village received, I think, a $105,000 grant for. Let's see here. There was the boiler improvements. The cost was $379,000. The village received a $173,000 grant for that. There are water treatment devices that the village is expecting to receive a $465,000 grant. You can't pay for these type of investments out of operating monies, right? They're long life projects. If we would pay for the water improvements, let's say $465,000, charge a resident living here today, and they leave next year, they're not going to be receiving the benefit of this long-term useful life capital asset. So borrowing really is the only way that you're able to allocate the cost to those who are receiving the benefit. Not to mention, majority of us have to borrow for our homes. You don't have that kind of money lying around. You get benefit of the house by living in it, and you pay off as you go along, and that's essentially what's happening here with the village borrowing. So that's really what I have to say about that.
Thank you, Mr. Tanner. I would just like to respond by saying that the board posted several notices for budget hearings in the village, and all residents were permitted to come in to discuss the budget. I wish you had attended one of those meetings so we could have answered some of these questions for you with all the documents being there and having the comptroller and treasurer with us. But since you didn't appear at any of those open board meetings, budget meetings, to discuss the budget, I can only say that I'm sorry that you opposed a 0% tax increase this year when we had a mandatory increase of over $1.6 million expenses. So with that being said, thank you, sir.
Excuse me, Mr. Mayor.
Next.
Mr. Mayor, hold it. You are raising, you're loaning, you're borrowing money. You didn't increase the taxes, but you're borrowing money. But my question was, who got the $1.475 million? Who's the escrow agent? He stood up here for 10 minutes and danced all around and talked about all these lovely deals he's making for us. But who is the escrow agent that's getting all that money?
I don't know of any escrow agent receiving $1.4 million.
What? You have it right
If you come into one of the budget meetings, we'd be glad to go over it with you.
It's in the actual expenditures.
Mr. Tanner, do you have a $1.4 million expense for a...
Ask him what page he's on.
What page is that on, sir?
That's in the bond. That's not included in the budget. No.
Where is it in the budget, sir? You're questioning about where in the budget? Where in the budget is it, sir? Okay. Just give me the page, sir, so we can address it.
I know what you're referring to now. You're referring to the prior year actual.
Only prior, that's when it took place.
Okay, but only...
This prior year, you just finished it 6 weeks ago.
Okay, yeah, I understand what you're asking now, man.
What is it,
There's
sir?
also the revenue on the other side.
Forget about the revenue.
You can't say forget about the revenues.
Dancing around here. Just answer one question at a time. Who got the $1.47 million?
Okay, you asked your question. Sir, sit down and let Mr. Tanner respond. Thank you. Mr. Tanner, respond to that. What is the answer to the question?
Yeah, Father, I'll explain in a second. Let me just see for a second, man. Bank of America, excuse me, Bank of New York is the escrow agent, by the way, for that.
Talking to the mic.
Bank of New York is the escrow agent involved in that. What the gentleman is, they're in New York City.
Sir, we're not going to go back and forth. Answer the question and end this, please.
Okay, fine. So I answered Bank of New York.
Thank you.
What the gentleman is asking is, last year's actual, there's an escrow entry of a revenue and also an escrow entry of an expenditure. That's all it is. It has nothing to do with the upcoming budget. The expenditure itself was covered as part of the bond proceeds that the village received when they did the refunding bond.
Thank you, sir.
So, yeah, so. Yeah.
Do we have any other questions?
There are no other slips, no.
I'm sorry?
There are no other speakers.
No other slips?
Mayor, if I missed that, one other
Go ahead.
comment to make before that goes. So I did want to just outline very briefly some of the amendments that were made to change to the, from the tentative budget. Okay, sure.
I'm sorry, sir.
I did want to go, again, outline some of the amendments that were made from the tentative budget to the amended tentative budget that's in front of the board tonight for
Yes, please.
for adoption. A good part of that was due to the finalization of the assessment roll that was received post-issuance of the tentative budget. There were some adjustments. Initially, we had some additional salaries in there for 4 new police officers. However, we moved that with the understanding that there was a limit in terms of the listing or availability of officers. We also made an adjustment to retirement based on additional information we received. We were also able to reduce some of the principal and interest payment of some of the bond anticipation notes by restructuring some of them. We eliminated a position in the rec center, added a position in street maintenance. That's on the expenditure side. And on the revenue side, we were able to add some additional pilots, building department, building permits, and we adjusted the transfer from electric as well. So again, that's just a general summary. I wanted to review with the community and also with the board.
Thank you, sir.
I believe the board has a detail of that in front of them this evening.
Yes, we do.
Mayor, if I may,
Yes.
if the board has no questions about the amendments, I would ask that the board adopt a motion ultimately adopting the proposed the amendments to the tentative budget.
So moved.
Second.
Madam Clerk, please poll the board.
Trustee White?
In favor.
Trustee Martinez?
In favor.
Trustee Ellaby?
In favor.
Mayor Kennedy?
In favor.
Mayor, also at this time, if there are no further comments from the board, I'd ask that there be a motion to close the hearing to further evidence and testimony. So moved.
Second.
Madam Clerk?
Trustee White?
In favor.
Trustee Martinez?
In favor.
Trustee Ellaby?
In favor.
Mayor Kennedy?
In favor.
Mayor, therefore the hearing is now closed for further evidence and testimony. At this time, I would ask that the board adopt a motion to adopt the tentative amended budget as the adopted budget of the village of Freeport. The resolution to that effect has been already marked into evidence. So moved.
Second.
Madam Clerk, please poll the board.
Trustee White?
Before I vote, I just want to congratulate you, Mayor, as this is your first budget as the budget officer, and the question was brought up before by Mr. Jay regarding you looking at contracts and so on and so forth, and I think over the past year, you have set a tone for the department heads, for the attorneys, for our budget director, and everybody else here, that we're going to watch the expenditures and work on behalf of the village residents to keep the tax rate, and that's why you delivered a budget with a 0 tax increase. I congratulate you on that, and with that, I vote in favor.
Thank you.
Trustee Martinez?
Before I vote, I want to personally thank the department heads for the village of Freeport. As you guys know, every year going through a budget process is very difficult, painful, and just not a pleasant experience. But in this particular case, I want to thank the department heads. The process this year was extremely professional. Everybody was prepared. There was a lot of valid and open discussion. This is a budget that is good for us. This is good for this village, not only today, but in the future. I also want to thank Mayor Kennedy for his leadership and his willingness to listen and to work with this board. I appreciate your service, sir, and I appreciate what you're doing for this village. So thank you, and on that, I vote yes, or in favor.
Trustee Ellaby?
In favor.
Mayor Kennedy?
I would just like to say thank you to everybody concerned in working with this budget. It was long, it was tedious. We did observe every possible line in the budget, both expenses and revenues. Thank you to everybody. Thank you to the board. I'm glad this worked out, and I'm very proud to say that we are offering or adopting a 0% tax increase budget this year. In favor.
Deputy Mayor Pinheiro.
Good evening, everyone. Late, but I participated with the board and the mayor in the budget process. I'm coming from Albany, actually, from work, and we cannot determine traffic. But as my colleague said, we worked very hard with this budget. Thank you, Mayor Kennedy. The department heads, everyone did their part in making sure that we deliver a 0% tax increase. With that, in favor.